Hey guys, welcome back. In today's video, we are talking about the AMC explosion, the time from MOASS, how hedge funds forced to close down, and many more in this video. First, we're taking a look at this AMC soon explosion when we're looking at what is going on. Right now, we are obviously at a ridiculously undervalued market cap, especially with everything that's about to happen for Q4. When you account for all the movies that's going to be coming out, you're going to see how the box office is really going to profit from this and improve, and how AMC is obviously going to benefit from this as well. Now, we've already talked about the Taylor Swift movie. We talked about how not only is that going to do well for the box office, but it's also the fact that it was made by AMC Film Distribution. And so that itself is also another source of revenue, but also the start of something that I think will be very, very significant. And so when you take a look at everything that's going on, you definitely are expecting that AMC's fundamentals to be looking good for this year, especially for Q4. Now, we've talked about the importance of having a good financials because of the fact that AMC right now has so many ways where it can attract investors. Whether it's the fact that because we are already doing so well in terms of our operations, the only areas that is making AMC look a bit bad, and I'm talking about this in respect to the fact that its financials are doing so well, is of course the fact that it still has debt. Now, one of the things we talked about is that whilst AMC does have debt, it is managing it very well. It's able to pay it back. They've also restructured it. So we've seen how they operated whilst having the debt. But if you understand the fact that if AMC were to be able to pay off their debt, then they obviously are going to be a even more attractive investment. And so these are some of the things that we talked about with how AMC improving their financials and just having more revenue and profit will obviously do for them. There's also other investments that they can make that we talked about, one of which we'll talk about later on in this video as well. We talked about how there's the potential share buybacks, the dividends. And so, with everything that's going on right now, you can expect AMC to do well. Now, this is the thing that we're talking about, Highcroft. So Highcroft, some apes have obviously bought into Highcroft as well, but we know AMC's investment in Highcroft as well. The reason why this is important is because we can see here, breaking news, the United States government is in talks to take stakes in multiple critical minerals companies. You heard it here first. Now, the reason why this is because, and for those of you who hasn't been living under a rock, you definitely would have seen what's happening with gold prices, what's happening with silver prices. And so we're definitely seeing the companies within these industries really thrive right now. Highcroft is, of course, one of them. Last video, or in a previous video, we've shown how ranking the US mines in terms of what companies ranked first, Grok actually ranked Highcroft first. So that obviously is showing in terms of how good it is as a company. So with the very fact that we're seeing more and more capital flowing in, especially how potentially Highcroft will be the ones that will attract the most investors, you can definitely expect its price to go up. And with the price to go up, you can expect AMC to make a very good return on their investment. And now this ultimately goes back to what we were talking about at the very start. When AMC improves the financials, whether it's through box office, whether it's through the investment, whether it's through any other revenue sources, it ultimately puts them at an even better position. It speeds up the MOASS because they can pay off debt, because they can invest in more things, because ultimately they can buy back and issue out dividends. And so that's why we're looking at that AMC explosion. Another thing to look at is actually the GME explosion as well. So you can see here, Wedbush has decided that GameStop stock is likely to explode, so they are no longer going to be raising that stock as buy/sell/hold. Does this mean it's time for MOASS? So you can see here for GameStop, GME's last sell-side analyst walks away. So we're seeing this from Wedbush. Now, they are also a company that we've seen who has been spoofing AMC as well. We've seen it through the spoof reports made by Crystal Ball, but this is also what we're seeing with their takes on GME now. Now, like we've said, the short sellers have always been mutual. So if a short seller is shorting AMC, there's a very, very big likelihood they're shorting GME as well. So they're affected in both. And so it isn't a surprise that right now they're walking away from GME. They're not trying to give a sell order on GME. It's because they understand everything that's going on. We've just talked about how well AMC is doing and how well AMC will also be doing in the future. But GME is also in that same position, and they are extremely afraid of the things that's going to be happening right now. They know that it's time for a MOASS, and so that's why they're not trying to put more focus on this. They're obviously trying to sway away. We've seen how these institutions have been trying to buy AMC, trying to buy GME, and this is the reason why. And we're really starting to see the shift in their views on AMC and GME. And we can also see it from here as well. The reason why we've known that they are panicking on AMC, on GME, and that they are in need of these shares is because things like this. GME being placed on red show is a red flag for systemic settlement failures tied to GameStop. It means someone is shorting that's exposing themselves to GME without having the real shares to back it up. And so this is what we are looking at. And with earnings coming, this can magnify volatility if institutions are forced to finally deliver or cover. So what we're ultimately looking at is just how well GME is doing. We've talked about the warrant, which is of course coming soon. We talked about the investment, like we've said with AMC as well. Both companies are doing extremely well. And we're seeing the side effects it's having on the short sellers now that AMC and GME is doing well. The effect being that GMEU is on the threshold list, is having settlement failures. And all of this leads to the fact that they are in need of shares of AMC and GME, and that they put themselves and expose themselves too much that at any point they will have to actually deliver or cover these shares. And so when we say it's time for a MOASS, it's because there are so many indications that are showing that this is actually happening right now. And you can even see for the institutions, for the retails, is that the accumulation for GME is just going up. And this is why apes aren't afraid, because every time you're looking at AMC going down or GME going down, you're looking at how people are constantly buying the dip. And now the only reason why it's not reflected that in the price is obviously because of the use of dark pool, because of manipulation, the methods that we know that they've been using to manipulate and suppress the price. But it doesn't change the fact that people view AMC and GME as an extremely undervalued stock. And every time they see a dip, instead of panic, they see it as opportunity to actually buy more. And that's the difference between the apes and of course the institutions who try to short AMC. And then you're also seeing how the overall market is like breaking, hedge fund forced to shut down, liquidate trades as losses mount. And so we're now seeing another hedge fund obviously going down, who's being known for shorting the market. But what I want to focus on here is how you can see right now the market is not kind, especially to these institutions. We are seeing multiple hedge funds getting caught up in the volatility. Yes, they're trying to hedge, but they're still not protecting themselves well. They've took some bad bets, and ultimately it can lead to them crushing down and of course liquidate their trades at a loss. And so this is why we've said the same with AMC and GME short sellers as well. We've seen these hedge funds obviously take bets on AMC and GME. They are able to suppress the price right now. They're able to keep AMC and GME down for the time being, so they're not going bankrupt. But we talked about how they can't do this forever. And at any point, you have to remember, these hedge funds don't just have one position. They obviously scatter the capital in other stocks as well. And so at any time, those positions were to go wrong, it will ultimately affect their position in AMC and GME as well. And so it isn't about just focusing on how AMC is doing, how GME is doing. Obviously, it's important because we don't want to go bankrupt, but there are also other ways which will force these short sellers to close down, to liquidate their trades. And so it's why we always focus on the collaterals, why we focus on the market, because we understand how it has an effect on these short sellers. And then we're taking a look at this as well. You can see breaking Robinhood and Fidelity halt buy orders for Genius Group for nearly 4 months now, becoming center of allegations in legal naked short selling as the company prepares final stages in filing lawsuit for naked shorting. is Fidelity out of shares? So we're not surprised that Robinhood and Fidelity is obviously involved in this, especially of course with Robinhood. We've seen their involvement with payment for order flows with all of these other institutions. And now you can see it isn't just the short sellers, it isn't just these financial institutions, the hedge funds that are having a problem, but the brokers are also seeing problems as well. Whether it's the lack of shares, whether it's the fact they've given out synthetics, whether it's the fact it doesn't match to the numbers, we are all seeing them, all have these problems. And these problems are all things that, if addressed, if we are able to solve it, will allow the squeeze to happen, because these are the very things that's stopping the squeeze from happening. And so if we can address and attack these problems, we can see the squeeze. And that's why we said it's time for MOASS. Now, as always, this is financial advice, so do take our grain of salt. Make sure you do your own due diligence and research, and I'll catch you guys next time.